going to take a look at global VC trends. Like the rest of the business world, VCs are navigating a tricky market today. Is it possible that the days of billion-dollar valuations are behind us? And which are the key sectors and geographical hotspots to watch in the coming months and years? Please welcome Aidan Madigan Curtis, a general partner at Eclipse Ventures, and Noor Swade, the founder and managing partner of Global Ventures. Hello. Thanks for being here, ladies. We've got like great geographic representation from Gulf and Silicon Valley, and I know you have very global perspectives to begin with. But I want to just ask you, you've been talking about some of the more macroeconomic shifts and everything we're seeing with obviously the tariffs and all sorts of uncertainty and supply chain and lots of stuff going on. How, if and how, I guess, is the question, is it impacting the VC world? Noor, do you want to start?
Happy to go first. Thank you. Thank you all for being here and for having me. I think when we think about the region, so we invest across the Middle East, Africa, and we tend to be thematic, but not sector specific. So we invest in everything, but at some points in time, we like different sectors. So 2 years ago, we published a very large report on supply chain tech and manufacturing tech and what that would mean for the region. And our view on the region is always that there are certain industries that have been underbuilt over time. So in 2018, we took a view that financial services was underbuilt. We were still 85% unbanked, and that technology was going to come in and enable us to leapfrog. And rather than having industry incumbents like the bank saying, that's impossible, you can't do this, it's always been done this other way, technology would be able to say, we're going to do this. This is the best in the world tech to solve a massive problem. So we saw now we're 52% unbanked and nobody built banks. In 2020, we had the same thesis on healthcare, where we have 1 doctor per 1,000 people. The US or Europe, for context, have 4 doctors per 1,000 people. So we don't have the industry incumbents. The industry has not been built out. 2 years ago, we had this view on supply chain and manufacturing. So we still have manufacturing at about anywhere between 5 and 8% of our GDP. Globally, it's closer to 15 to 20%, depending on which country you take a look at. So we said, we're going to come in and we're going to build. But no one's going to sit here and build manufacturing of like 1995. We're going to come in and we're going to say, what is the best in the world tech? And that looks like 3D printing, additive manufacturing. What is the best in the world supply chains? That looks like drone delivery, 4PL, not 3PL solutions. And so we're going to be able to build out this industry over the next 5 to 10 years using the best tech in the world. So that's how we viewed it, and we've made several investments with that mindset. One of our companies is creating a digital warehouse for oil and gas spare parts. So what that means is oil and gas as an industry has 60, 70, $80 billion, $90 billion by last count of spare parts sitting around in warehouses around the world. They've made those using raw materials, shipped them having a terrible impact on sustainability, put them in a warehouse, draining their working capital, and every year they have to throw away 20 to 30% for HSE reasons. So these guys came into this part of the world, and they're from here, and they said, this is a huge industry here. Let's play to our strengths. But how do we turn this on its head? So they came in and said, for each spare part, we'll make a 3D blueprint, and then we will charge the oil company for that blueprint, and then we will charge the oil company for a digital warehouse, so a monthly SaaS fee, a proper business model, and anytime they need anything, we can manufacture it locally within 24 to 48 hours for big parts, 24 for small parts, using our facilities, or we can subcontract other facilities in other markets, any 3D printing manufacturer. And our money comes from this, and they get to use that working capital elsewhere. So we've solved real problems for them. Here, it's an acute problem. It's a real problem, because otherwise we're shipping in from outside. If they had tried to do this in Europe or the US first, they would have had industry incumbents really challenging them and say, why would you take this risk? Right? Here, it's really a solution. So now they have not just ADNOC and Aramco, they also have Total and Shell. They're entering the maritime industry in Europe, and they've managed to scale globally by proving this works here first. So this leapfrogging to supply chain, manufacturing, everything is what's happening now.
I'll jump in really quickly on
By the way, opportunity is basically your answer in a nutshell, right? Okay.
Actually, that's funny. So quickly on global macroeconomic trends. So I am a general partner at Eclipse. Eclipse, for the last 10 years, has been investing $5 billion across industrial technologies. So manufacturing transformation, transportation autonomy, new forms of energy, stuff like that. And the way I wanted to answer you is I just think it's really funny in terms of VC. You know, VC is meant to be this long-term time horizon, breakthrough technologies. VC is the most hype cycle-y style of investor you've ever seen. COVID comes along, suddenly all the VCs are like, oh, let's invest in supply chain. Turns out we can't make anything in North America anymore. Or we need, wildfires are ripping through California, and it's like, hey, let's do climate tech. Seems like we maybe have a problem here, right? So the last couple of years, we've seen this really big focus on industrialization of North America based on some of the supply chain trends, or defense tech based on some of the geopolitical tensions coming up. And so that is how the global macroeconomic trends are influencing VC. VC is sort of, in my view, behind the eight ball and then saying, okay, well, how do we catch up? Obviously, at Eclipse, we've been doing this for a decade, and we really do believe in bringing industrial technologies to market. And we agree with you; they're like really deeply underpenetrated. It's like 85% of global GDP, and still very little technology truly driving change. So, anyway, that's what I would say.
Okay, so even before last few months and some of the global, again, trends that we've seen, the venture capital industry was undergoing some shifts for sure. The last few years we've seen a lot of shifts throughout, and one of those changes, and I guess it's hard to tell from an outsider's point of view, like just how widespread and meaningful those changes are. But we have seen some venture capital firms, especially in Silicon Valley, some of the big ones, not move away, but sort of add to the traditional model of putting capital into startups and looking at, more at secondary, at public market opportunities, even cryptocurrencies. Like, is this something, again, as an outsider looking in, but very interested in what's going on, like, how big of a deal is it? Is it going to continue? What do you make of it? And is it a global trend?
Go ahead. I'll defer to you on the global side. Certainly in the US, what we're seeing is exactly that. So this big bifurcation between what you could consider to be more like large asset managers as VCs. So these are funds with dozens of billions under management. They may have shifted their focus from being only early stage seed and Series A or growth stage to your point, having evergreen funds, doing multi-asset class, providing credit, providing debt even. And then there's the other side of the coin, which is managers who have more of a niche or differentiated strategy. They're kind of picking a lane. They're becoming known as like the best investor in the space. So that is the dynamic of what's going on. 75% of capital raised last year in VC went to the top 30 VCs, and there's like 10,000 other VCs behind them, right, that raised the remainder. So it's kind of a world of the haves and the have-nots, if you will. Why this is happening? These trends have been developing over time. If you think about it, if you're just a generic manager, you do basically anything, you're excited about the next best thing, how do you differentiate yourself, right? You've got firms like Andreessen Horowitz or General Catalyst or some of these sort of very well-known brands. And if you're a founder, you want to work with a brand that can do multiple rounds, right? That can, quote unquote, back the truck up into your company if you're the big winner. And there's a good signaling there. So it's really hard to compete if you're not differentiated. Eclipse, we pick a lane. We've been industrial tech investors for a long time. So the only real way to stand out is to have a strategy and have differentiation. And that's the dynamic that we're seeing right now.
Nor any other thoughts on that?
I would just add that from a regional perspective, the VCs are very much niche players. So they're specialists. We're focusing on the region. We enable these founders to scale globally or to become regional kind of dominance. But we are focused on that, and we haven't yet seen this asset management trend come in.
Okay. I'm going to flip things around a little bit and ask you both to talk about what we're seeing in terms of the entrepreneurial, the founder ecosystems, and sort of where you're seeing opportunities. And Nora, I want to ask you first, you literally wrote the book on the entrepreneurial ecosystem here in the region. What do you think, talk about sort of what's gotten it to this point, and what does it take to get to the next level? And just speaking of Saudi specifically, PIF's 40% of the money is still going to U.S. investment. So what does it take to move more of that into the region?
So you want me to give my book away?
Yes.
Spoiler
yes,
alert.
Exactly.
So the book, for context, I wrote a book. It came out in January. It's called Coming of Age, How Technology and Entrepreneurship Are Changing the Face of MENA. It's on Amazon. It's actually an Amazon bestseller now. And yesterday, it made it to the JP Morgan must-read summer list.
See, I actually am giving you a plug. I'm not asking you to
I
give
appreciate
anything
that.
away. Yeah, you're welcome. You ran with it.
So the book is a journey of 35 founders from across the region. And it starts with what is MENA? What is the Arab culture? What is the tribal nomadic culture? And how does that influence how we operate today, how we build relationships first? You know, how sometimes it takes 17 meetings to get to a yes rather than 3. So really it's about that. And then it's 35 founder journeys from the founder of Amazon, which was Souk, Ronnie, to Modassir and Magnus that founded Kareem, and their journeys 20 years ago. And what was it like back then? And from that, the lack of talent, the lack of payment rails and infrastructure, the lack of logistics. There was no Google Maps back then, so how do you do last mile delivery when there's no street names and no Google Maps? So really thinking through how you have to build all of your infrastructure before you can build your company. And then the book goes through the evolution of fintech, health tech, ed tech. So for context, we have 43% of our population in schools today. The global average for OECD is about 20%. So when you think about just under half our population is today in school and learning, are they even learning anything relevant? So what is ed tech doing today to really enable them to be productive members of society in the future? And then thinking through supply chain tech, and really finally ending the last section with crypto, AI, and energy. And where does that take us? So the thinking behind where the region started, where the region is today, the region's 450 million people across MENA, half are under the age of 30, so they are coming of age. The region's coming of age, and technology is being used to build out industries in the best way possible. So as we think about that and who we invest in and where the dollars go, when I started my firm 7 years ago, the region had $400 million of venture funding. Today, last year, we had $2.4 billion. Now we manage $400 million, which is ironic that we're the size of the ecosystem just 7 years ago. If the ecosystem continues to grow at the same rate, just in another 6 years, we'll have over $10 billion of venture funding annually in our ecosystem, which is massive for what we can do. And where that will go will be this next stage of evolution, which is this AI, crypto, energy. Our founders in those spaces are just as good, if not better, than a lot of global founders out there. The ability of the region to attract talent, to attract capital, and to be the center of the new world geographically and from an ideology perspective, really the middle of the new world. So as we think about that, that's where the book lands, is really the future is here. We have the opportunity to lean in and to create and innovate and lead, not just emulate and catch up.
Okay, don't tell everything about what happens in the end, because you
haven't. It's like you have to read the book.
Yeah, you do want people to read the book.
The book comes out in Arabic the week after next.
Oh, amazing!
And the audiobook comes out next week.
Are you the narrator for the audiobook?
So I did the first 3 hours, which was an incredibly interesting, painful, and exhilarating experience all at once. And then
it seems like it would be so easy, right?
It's so difficult. Yeah. And then we had 11 Labs, which is an AI company that can create deep fakes, do the rest. So I can't tell the difference. My children can't tell the difference. My team, who talks to me 100 times a day, can't tell the difference. The only thing we did have to do was reinsert the Arabic words so that they're not pronounced like an AI or an English person speaking Arabic, but rather like an Arab speaking Arabic.
Amazing. Yeah, if you haven't played around with 11 Labs,
it's awesome.
Amazing and freaky.
Yeah. Quick on founder trends.
Yeah.
Two different worlds. So in the world of physical technology, we're seeing incredible founders begin to come out of Tesla, SpaceX, Amazon, Samsara, the company I was a part of growing and leading for a long time. So it's really neat to have a group of companies that have really gotten to scale in this like atoms plus bits universe, and to see some really talented people come out and begin to sort of break ground in new spaces. We have a company called Mitra that does autonomous warehousing. That was a person from Tesla, or a person doing electric autonomous boats, a guy from SpaceX. So, sort of branching out into those spaces. And then the second big
autonomous boats?
And electric, yeah.
Okay.
Yeah.
Sorry, it was a delayed reaction on my part. But
yeah, there's actually quite a few people. Yeah. We have another company called Blue Water that's also doing autonomous boats. So it's a big space, and it's as the US, we're very behind in our ability to do technology for marine and basically build out our marine base. But anyway, the other trend would be that some of the people more from traditional B2B SaaS backgrounds, we're seeing them jump in and take advantage of the lightweight companies that can get built now with AI and generative. So sort of two different themes that are kind of fun to play with.
So, it's interesting you touched on kind of this like PayPal mafia concept, which is, all of the founders that come out of these really successful, innovative companies, and seen that at Tesla and SpaceX, as you mentioned, and other places. Palantir also is kind of starting to, sow those seeds, right? Are you seeing that trend start to emerge here in the region?
We've seen two trends on talent. One is the Kareem mafia, if you will, so people coming out of Kareem, building companies, and that's been great. But the other trend is, and our third fund from which we're deploying now has 3 founders out of 8 that are in there already, where it's their second or third company, and the first 2 were outside the region, and they very successfully exited those for wonderful amounts of money that they then paid a huge tax bill on. And so in their pursuit of their third venture, they discovered tax-free environments, and their argument is, I can attract any talent from anywhere in the world to come live here, whereas it's really hard for me to get the visa approvals for this talent if I were in Europe or the US perhaps. So as long as they're building global companies, many are moving to the region to think about, how do I build here in a more tax-friendly fashion with access to better talent and better time zones and better weather.
So one of the ways that the VC industry is very much directly impacted by kind of what's going on a more macroeconomic level, and when it comes to the public markets, is the exit strategy, right? And so there's been a lot of delays on the IPO side. Now we're seeing some signs of life. There's an Israeli company, eToro, that just went public, and reading a lot about is it back on? Because there are some companies that are kind of waiting in the wings. Went public on the NASDAQ, I should say. What are you optimistic? Are you cautiously optimistic? What are you reading into this?
Do you want to go first?
Dead. It's still dead. Sorry not to be a pessimist. And
So you're not cautiously optimistic?
I'm going to disagree with you.
Yeah, that's fine. That's good to have some disagreement. I was actually going to ask you about how people build their companies here. Yeah, get exits in the region. But just to finish my thought, so I don't just come across as a total Debbie Downer.
You started by saying dead.
Dead,
so,
yeah. So you got to make your point, right? So dead, but where are there signs of life? Certainly in the acquisition market. So we are seeing really cool things happen. Companies like OpenAI, Windsurf, $3 billion acquisition of a company that wasn't even very old. Databricks is doing the same thing. So I think some of these mega players that have stayed private and are getting built up and bid up, and who knows what the exit strategy looks for those guys in the long run, but probably at some point they'll need to IPO, but they'll IPO as just behemoths in their space. And they are kind of creating almost these mini ecosystems where they're doing more acquisitive activity and creating some really kind of neat, fast-paced, high IRR, like high IRR exits. So we like that. And then we're also seeing this notion of staying private for longer, being able to do secondaries to provide employees liquidity, and just really building such a compounded winner in the space that you're completely untouchable. And companies like SpaceX are like that, I think.
Nor 20 seconds of optimism?
Yes, I'll try. So we as a firm have had 6 exits out of our portfolio. So we were able to have exits that are not IPOs. We've had a few secondaries. We've had some M&A. We just had an exit out of a Nigerian company where we generated 28 times our proceed, 8 times our A. So that's all still possible. I don't think IPOs are the holy grail. They're the minority. We will have 2 IPOs out of our portfolio in the next 12 to 18 months, one within the next 12 months, one shortly thereafter. The regional IPO markets have never been stronger or better. So we had a 30% growth in regional IPOs last year, which was on top of 30% the prior year. And we had our first tech decacorn in the region list in December in Dubai. So between the Saudi IPO market and the region's IPO market, there's really no shortage of IPOs. These have been the best years for IPOs in the region, and it's wide open.
All right. Thank you so much to both of you. Thank you.